right, I think we're live here on the recording. Let me go ahead and get in the Discord, get that all squared away. I had a little bit of an issue. I had to kick myself off of there. All right, good morning, good morning. Can everybody hear my face? Can you guys hear my face? I do have my camera on. Go ahead and watch that. I don't do the screen shares because it messes up the stream quality. Hey, Farouk, what's going on? Farouk. Ooh, we're getting people piling in here. All right, we're doing lock them up. Yep, right off the bat. Just going to prison. All right. Nikki for president. Okay. I'd vote for that. It'd be a little bit contentious at the ballots, but I think we'll be okay. All right, it is Tuesday. It is June 17th. We got Juneteenth this week. So Thursday we will still be doing a live stream, but it won't be live trading. So we'll go ahead and you want to do some recounts. Okay. You remember the Chads from the 90s? Oh, what's up, Adrian? Penny Penny, Mr. Steak himself. What's going on? We do have we're in the free section today. So we have, hey, what's going on, J-Wag? Fergie, how's it going? God, you guys are all just pouring in here today. So we're on social media and all that good stuff. So we're exposed to the outside world. So we got to behave a little bit today. Oh, PCSA, look at that. I don't remember what these lines are for, but we got them. It's like a nice place for the price to turn around, right? That's pretty cool. All right, so this morning I'm just going to kind of take it easy. I do have the NVIDIA call from yesterday that I didn't get out of because I kept getting distracted and stuff. So it is what it is. Let me actually check on NVIDIA here, pre-market, see what's going on. Looks like we got a little bit of a push-pull scenario here. It's right around the break-even from yesterday's close, so I'm not too worried about that. Hey, what's going on, Stickman? How you doing? So I'll just go ahead and bump down here to the 2 minutes. So it's still liking this zone that we drew from yesterday, the 15-minute opening range. So we're going to do the same thing today. Am I still holding APLD? No, I don't. I don't have any of that one. I was actually just looking at that one yesterday for APLD. Let me go ahead and pull that one up. I still like it, but I don't like it for like a long-term investment. Not yet. I mean, I like it, but I don't like it like that. Not just yet. It's getting there though, right? So with APLD, you know, we've got this kind of dynamic zone here with these higher lows where we get these massive moves to the upside away from it. So it's way overextended at this point, and that's not to say that it's due for a pullback or any of that BS. That's not real. But it is a little bit risky to take it up here because that would extend the risk range. Then I can't justify that. So I'm just going to go ahead and wait till we see a more stable support, and I'm just going to trade the hell out of it on those pops, right? And then tight risks. That way, if it goes the direction that's going to make us money, we'll let it go. And if it doesn't, or if it stops doing that, we can choke it out and it'll never see the light of day. So that's the plan with that one. I don't really like to just buy and hold these things. I will when it's a little bit more established, but I'm really just looking for these massive pops, and we're probably going to see some more, but I'd much rather see it down here where it makes a little bit more sense, where it's around a more appropriate value. We'll just have a better time. So for this account, I am just trading the two equity positions. I'll probably do one equity, one option, but I also have this open call from yesterday, so don't know if I'm open for that. So I might just do 2 equity trades today. It depends on how NVIDIA shakes out. Not expecting to have a super profitable trade on that one. Probably going to take a loss, or it'll dip into the red if NVIDIA doesn't hold up. But it all kind of depends on how it handles this zone. So you can see here, you know, it's popped out of the zone multiple times. I kind of like this area, and it's retesting multiple times. We are heading into market open in about 10 minutes. Hey, what's going on, Ramir? Is that Ramir or Ramir? How do you pronounce that? Just go ahead and spell it in a way that I can somehow read it. That'd be funny. Ramir? Okay. Woo. We did it. We accomplished that. Shut up, alarm clock. Sorry, I got to just turn that off. I do that every live stream. All right, so I'm just going to kind of wait until the market opens up, and we'll see what's going on. I do have the top gainers list here. I also like to check the top losers list here just for quick bounces, but these don't typically have a lot of volume, and these are obviously much higher risk because they're so bearish. So If we're just trading a bounce, they're okay as long as they have the volume. But you can see a lot of these times it's just, you know, hundreds of thousands of volume. I want millions. I want a lot of volume, a lot of participation. So probably going to take a look at PCSA. I was watching this one pre-market quite a bit around here. You know, this is kind of the quality opportunities that I like, where price just pushes in one direction, and then I just get in and get out, like right here, for example. Stuff like this, you know, this is ideal just because it's got participation. There's a little heartbeat, and I just look to get, you know, from there to there. I don't look for these huge, massive runs, and I'm not doing these pre-market, obviously. But if, for example, I had my levels here and here, my stop loss would be like right there, right? And that's the idea, is just get in, get out, and then, you know, because we're getting in when the price is going the direction it's going to make us money, there's zero justification to continue holding it when it stops doing that or goes against us. And that's just how we make a bunch of money in the low float world. So for bigger stuff like NVIDIA, I'm okay letting it breathe. I just didn't get out of my position yesterday. I never got filled. And then it rallied up. And then in the market close, it kind of pulled back a little bit. So let me just pull this back here. And by this time of day, I wasn't looking at the account. You know, it was just up, and then it is what it is. So ended up holding that because I had meetings back to back. 4 o'clock hit, and I just never came back to this small cash account and ended up holding it. So here we are. I did count yesterday as a deviation though, because the if I remember correctly, it did hit my stop somewhere around here. I can't remember exactly what happened there, but I did mark down a deviation and I wrote it out. It's over on my little notebook over there, but I'm just going to hold myself accountable as well. Hey, what's up, dude? How you doing, man? Happy morning. Happy Tuesday, June 17th. How's your pre-market? We got about 7.5 minutes before the market opens. And I think I'm really just going to look at ACXP and PCSA today. I don't really think there's too much need for anything else here. Matster says, my audio is spot on, but there's a lag in the video. I wouldn't change anything because the audio is perfect. Just know that there's a delay-ish in the video, at least for me. I'm sorry about that. Not too happy about that. What, if you had to guess, like how long do you think it was? Like how big of a delay? Quarter second, half second, 3 seconds? And is it with my camera or is it the chart itself? Like if you pull up your clock, how far off is that? I'm just curious. 3 to 5 seconds. For real? Ooh, all right. Let me turn my camera off, see if that does it. Ooh-wee. How about now? That's not good. I'm sorry about that, guys. It catches. So does it, like it buffers like intermittently? That's not fun. So what I can do, I guess, is I can just screen share here and there in the Discord. Let's try that. Let me just try to screen share in here. And we'll just see if that works. Can you guys see my chart in the Discord? Call the tech guy. Oh boy. No, I appreciate that, Master. That's good feedback. You can see it. Is it better now, Loki? Like if you line up your clock with mine down here. Or I guess you don't have to line it up. Just are there gaps in the second counts? Okay. Okay. Sorry about that, guys. Thanks for letting me know, Master. I appreciate that. That's good quality feedback. Very nice. So this one right here, this is, you know, I just watched the order book and the time and sales. Like this is a high quality scalp opportunity, but we keep those super tight risks, and I'm not doing these pre-market. But if I saw this like into the open, I would probably look for a break over this level, right? And then that's when I'd get in, and then I have my stop loss like right there. So let's go ahead and wait. Discord can't keep up with OBS. Yeah, OBS is just it's a data dump. Let me erase all these lines. I really don't remember what these are for. These are from a long time ago. I think we traded this forever ago. Oh no, yeah, here we go. I was explaining something at some point. What was I explaining? I was explaining brackets. Okay. I don't remember what time frame I was on. Yeah. Okay. So this was the this is actually my position strategy. So that's funny. Wow. Okay. Yeah, it must have been on like maybe a 1 hour time frame or something like that. But yeah, this is the trade setup that I use. So first trade of the day. Obviously, we have an exception here because of NVIDIA. I try to shoot for a 3% overall P&L, which means I take half the portfolio, put it into one trade, take a profit at 6%, which gives me a 3% overall ROI if it hits target. And then if I lose that trade, then I take a second trade and shoot for the same result. And then that brings me up to 2.5% overall P&L. If I take a 0.5% on the first trade. And then 3 trades, that's if I wanted to. I think this one I was probably describing, I think like at Trader's Paradise, for example, Fergie asked me about a 3 trade setup. No matter how many trades you take, if they're equal allocations, your end result, as far as your percentage P&L, will just be the average of all your profits and losses on each of the trades. So we don't have to worry too much about that for today. And I think here I was talking about, kind of the overall process of trading. I like how I wrote, give up, wash out, talk to spouse. That's funny. All right, so let's go ahead and erase all those. If you guys have questions, obviously I can just answer them because I'm here. And we got about 3 minutes till the market opens. So let's go ahead and look at the 5-minute chart. On this one, ACXP has pushed up a little bit. So in this case, like this is the kind of stuff that I like personally. Now this risk range is a little bit big. So if it does get a breakout over here, ideally we get a breakout over this guy. You know, we really want to be patient with this stuff, and I'm not doing it before market open. And this is the kind of reason why, because if I just tried to get filled like right here, I'd end up getting filled down here. So it's just not worth it. That's a good, like another 3% or 2% or something like that. Yeah. 3.5%. So no reason to be jumping into that stuff just yet. But I do have brackets set up so that, you know, when I place my order here, I can automatically set a take profit, and that's all I really care about. So we got about 2 minutes till market open. I'm just going to keep an eye on NVIDIA here. So this one, I'm just going to set a sell order up just in case. So I bought this at 38 cents, and IV and Theta is going to make it go crazy into open. And then we're probably going to get a huge sell off because I'm live streaming, and that's just how the market likes to do. So we'll go ahead and see if we get that. Man, we'll just wait. We got about 1.5 minutes, and I also have to pull something up over here real quick. Sorry about that, guys. Just got to do some housekeeping stuff before we get into the market open here. All right. Click some buttons. All right. All right, and then I'm just I gotta turn my camera back on for the live stream there. All right, and pull up so I can see anybody on Twitter laughing at me. We got about 1 minute till market open, so I'm just gonna go ahead and get this all rocking and rolling here. Now I do have my hotkeys, and they only really work during market hours. So Control 9 is gonna be my favorite. That's just what's gonna let me get that scalp to the upside, and we'll just go ahead and keep up the tops list as well. So ACXP has pulled back. It was up to 216. Now it's down to 202. So this one is showing a little weakness going into the open here in about 35 seconds. And PCSA also is just kind of puttering around. And this will probably be the one that just gets a really quick pop and then probably a harder sell-off. So we'll see if that happens. Otherwise, that volume might just sweep out, and then we'll probably just get nothing. So getting in and out is the name of the game for these, and it doesn't have to be right in that first minute. So make sure that you guys have your own plan and your own risk tolerance is baked into that. Don't ever just copy me or anybody else, because I have my hotkeys, I have my system, and I'm okay with my risks, but I don't want you guys to hurt yourselves trying to follow, you know, especially because there's like a delay and all that good stuff. All right, so market's open, and I'm just going to pull these up side by side just so we can see. Oops, I got to turn that off. My bad. Oh, there we go. So if we get a breakout here, I'll go ahead and hit Control 9, maybe. And this is on PCSA. So actually, let me just draw a line here. All right, my NVIDIA contract's up about 10.5%. I'll just see where that goes. I'm not going to focus too much on that. And then for ACXP, I'd really like to see a break, ideally near $1. But these have to push. They got to show some strength. Otherwise, they're just going to deflate. NVIDIA's up about 26%. And that's it. This is why we don't jump in. Anybody feeling any stress? Well, let me turn this to the 1 day as well, because I like to make sure that that is, that's ready. All right, so it looks like ACXP is showing a little bit of contention here. PCSA is just kind of pulling back. Looks like both of these are kind of pulling back. NVIDIA is up about 31.5%. But this right here is why we don't chase these guys. So you don't want to just jump in at market open. We'll catch it on the way up. I also don't know why my top gainers list is like red. These are completely upside down. It's great. I love it. I don't know if you guys can see that, but the top gainers and losers are switched on my Weeble. All right, so this one's here. ACXP is getting bought up a little bit, so I normally would have just scalped that, but it was a little different on live stream. So we're gonna go ahead and wait, see if we can get that quality breakup. Looks like both these are getting some volume here. And there's a little bit of a flutter on this one over here on PCSA. So PCSA is on the left. I'm going to go ahead and grab that one. Oop, didn't get filled. Let's see if I get filled. And I'm going to go ahead and get ready for ACXP. Now, if I don't get filled, that's okay. I can just cancel the order. What I don't want to do is catch these on the way back. So I'm going to go ahead and trade ACXP as well. So I got filled on PCSA. It's on the left, and I'm just going to let it sit there. I'm going to let it cook a little bit. And then hopefully it doesn't just slam down. Just kidding. I have a plan for that. So if I need to, I can always just cancel this order really fast and cancel out of it. ACXP did get filled, and it's pushing so far, so we're just going to let that one cook as well. And I'm going to uncheck this, and then since this one isn't blasting, I'm just going to let it sit there for a second, and I'll use my hotkey. I'll just do Control-3, and I'll keep this chart active over here. I guess you guys can't see that because the camera's in the way. You guys can see the P&L over here. Hopefully that works. But yeah, so I have PCSA over here on the left side. I'm just going to keep that chart active. And then when ACXP hits target, then I'll swap it over. And now we watch paint dry. All right, so ACXP is about to hit target here, and we just got to get filled. All right, so ACXP hit target. I'm filled. I'm getting out and running away. Don't care about it anymore. Not going to look at it. Not going to beat myself up, because that's the stuff that gets in people's heads, and that's where we destroy our mental health. So don't do that. Over here, PCSA, I've got my trade set up over here, and if this breaks down, I'll let it dip a little bit, but I'm not going to let it go too far down. So we're below, and now if it forms a new low after this point, then it's a hard cut. So I'm going to go ahead and move this line down here, and we're going to look at it really, really closely, and I'm going to hold control, and then I'm just going to press 3 and I'm out. Zero hesitation. All right, and then that way I've taken a little bit of a hit on it, but it's okay, right? Because what this does is it saves me from all this red down here, 40–50%, because that doesn't feel good. So we're just going to get in, get out for these, because we're in that first 15 minutes, and that's where people get blown up. So some days we take a little bit of red, some days we take a lot of green, and that's all I care about. So we can look at ACXP if you want. That's just going to cause FOMO and all that stuff. So you got to decide whether or not you're comfortable doing that to yourself. I'll keep it up here just so we can look at it. But, the healthier quality trade was a breakout over here with a tight risk. I just grabbed the kind of preliminary entry on that one and just got out before it even got to the breakout, or right around the breakout. So just quick scalps in and out. We're going to have a little retest and things like that. There's going to be a lot of push-pull, a lot of FOMO, a lot of people taking profits that were in, early. And then as soon as that cascade, topples over, You know, you see all that panic selling and they violate liquidity and all that good stuff. So I just don't want to get caught up in all that stuff. I just want to get in and out, get my piece for the day, and move on. So, you know, if I didn't have like the NVIDIA trade over here, right? Another thing we could have done is just used like a 1% stop loss on both of those. And then we could have just gotten in and out. Now, when ACXP was the one this one, right? When this one ran up and hit target, I could have just stopped out of the other one as well, the PCSA, right around break even. And then that still would have kept me up around my 3% profit for the day. But this right here is why we don't mess around. What's that? 19.8%. So it's not about avoiding losses. It's about making them small and digestible. So I'm okay with this little 2.6% for the day. You know, tomorrow, Thursday, Friday might be like 12% up, 17% up. But this right here is this is a cognitive dissonance zone. That's 27% drawdown so far. So at this point, you're probably freaking out. You're probably having a hard time. You're probably, you know, blaming yourself or blaming me or calling me names or any of that stuff. But we gotta use our stop losses. We got to keep things tight. Okay. Did anybody trade either of those? It's okay if you did. It's okay if you didn't. There's no wrong answer here. I'm just curious. No? Okay. Does it seem a lot more achievable if we do trade them to just lock in those tight profits? Can't do day trades until Friday. You're on a margin account with less than 25K. You're safe. Okay, that's good. So you're forcing yourself to manage risk, right? Yeah, there you go. We like that. It's a good strategy. Fergie, you traded ACXP? This one here? You got in later than me? Are you still in? By chance? No? Okay. Whew, scared me. All right. Did you use an appropriate position size given that these are low float, high risk runners in the first 10 minutes of the stock market? You got it with a profit. Humble brag. That's good stuff. So you just clipped a small piece and ran away. Beautiful. That's what I like to see. 1385. Okay. Good stuff. You did better than I did, right? Congrats. You went to Trader's Paradise and now you're just a machine. All right. Fireworks in NCNA. Okay, what's going on with that one? Where'd you get into that one? I remember this one. The float on this is silly, right? But there's no restricted shares, or very few, I should say. So if this one pops, you know, it's going to take a little more volume because it's 8 million. You know, we traded this, what was this, June 10th? So, you know, congrats if you were there for that day. But yeah, this one it's pretty clean. I like it. Small Scottish farm. Yeah, I like it. So this one specifically, like if you notice, right, it's got a lot of volatility, a lot of violence. I really like it for just the surges of volume. So once you get those big, strong volume moves, this one can be pretty good. But if you're just getting in and out, you know, that's good too. Are you in it for a day trade? Ooh, this is nice. So if you're looking just for pure high potential, low risk opportunities, you know, stuff like this is pretty sweet. Now this is a, you know, 1% risk. Now you got to be very careful. Obviously, you want it to actually be moving in the direction you want it to go with some strength before you jump in. So I'm just drawing this. But like, if you got a good strong break on that, ooh, that'd be nice just for that continuation here. Now the you know, you had the impulse 5 candle, and then you had the pop, right? And if I draw that, that's going to be a nice clean fib. You know, you kind of touched the 50 to 61.8, and now it's just too bearish, right? That's why I'm not jumping into these. I'm just drawing boxes. But that is a bias, right? And the bias in the market is kind of irrelevant when it actually comes time to the price going up and down, right? So price is going to go back and forth. You're going to get, support. You're going to get outvoted, right? That's just how the market is. So if you view the market in terms of prices going up, I have to be right. Prices going down, I have to be right. You're going to struggle and you're going to compromise and you're going to beat yourself up a lot. Instead, what we like to do, or what I like to do, and what's made me successful, is making sure that I view it in terms of risk and concentrations of risk. So if you look at it as like a support and resistance level, like let's just watch this level here. As the price gets farther away or closer to this zone, okay, the size of the risk that I could potentially take if I see an entry, if I'm using this as a support level, gets bigger or smaller, right? And the participation level goes up because I know there's a lot of volume here. So this is an area of high potential, in my opinion, right? Doesn't mean it's going to be a guarantee, but it means that if I see a good confirmation down here and that carries a super minimal risk, then I can trade that successfully over a period of, 10, 50, 100, 200 trades, right? So my definition of success is how small I can make my losses. And we did that today on PCSA, right? And we can see here that there was, another roughly 20% worth of drawdown there that we didn't have to deal with, right? This is all tears and hopes, right? I don't want to participate in that. I want to just grab something that makes sense as it's pushing and then get out when it stops doing that. That makes sense? ACXP halted down. Ooh wee. Yeah. That's why we take our profits, JY. Good stuff. I mean, it sucks if anyone's still in it. Is anyone here still in it? Were you guys scaling out? No? Hell no? Okay. These are risky, right? We don't want to stay in them. Never in it? Okay. That's good. Yeah, just watch. Let me take the hits. But little float, like low float garbage like this, the sub-dollar trash, right? You can just trade the pushes. You don't want to trade the volatility, the chop, right? Because that's going to hurt you. And you don't want to use big position sizes for exactly this reason. This is another 17% drawdown candle, right? This is a future discussion with the spouse that we can avoid, right? Or with your accountant, or, if you're trading as a business with the IRS potentially, so this thing still has plenty of room to the downside. And when it unhalts, there's no guarantee it's going to go to the downside or any of that stuff. So right now, people are stressing themselves out that are in this. They've got about another minute and a half or so, maybe 2 minutes worth of emotional turmoil before they find out what's going on, right? We talked about it in Trader's Paradise. It's an escalation cycle and it's a loop, and they can't close that until they have data, right? So we got to be very careful with our risk exposure in terms of duration and size. Okay. Let me just read about it. Chris M says, I made about 5% in ACXP and stopped out with the rest of my traded entry. Beautiful. So you had a nice clean stop loss, a nice little profit. So you should be net profitable, right? Did you sell the bulkier shares at that 5%? And then have a little bit for runners? Half? Okay, good stuff. So you just take so you made 2.5% overall then for dollars invested. Test Theory BTC, what is your guys' thoughts on OIS? I've been invested since COVID. It's been doing extremely well the past couple of weeks. Just want some advice on my next move with that. So the one thing we can't, and I would never give, is advice. I can share insight, I can share education, and I can point to things and ask you if it makes sense. But I can't give you any advice. So let's take a look at OIS. So you're investing in this, right? Actually, I like that chart. It's a beautiful chart. Let's go ahead and look at the monthly. Okay, so we got a little bit of a springboard, as Austin would say here, right? Go ahead and look at the weekly here. So, I mean, the analysis looks solid. You said you were invested since COVID, so around here, since the bottom, right? So I feel like you got a pretty good profit range on that one. Do you scale out or do you run options on it? I haven't seen the options chain here. Oh, that's trash. Yeah, you can't really do options on that. That's okay. We can make it work. All right. So next thing I'm going to do is I'm going to pull up a couple of websites. right? We're going to pull up the SEC database. We're going to look up the company on FinViz, and we're gonna do some stuff, right? So on FinViz, okay, I see a current ratio, quick ratio of 1.91, 3.42. Don't really see anything substantial here. It's got low insider ownership, but it's an oil company, 82.5% institutional ownership. So they already got to it, right? So the accumulation phase is already well underway. You've got, I assume, a nice low position if you're invested since COVID. Is it safe to assume that you were down here in this lull? Like March 2020, April 2020? If so, congrats. That's awesome, in my opinion. Exactly. Oh, okay, cool. So you're just kind of figuring out whether or not you should take your money and run, right? And right now we're lower than they were, a couple of months ago, right? And then before that, before COVID, obviously it was much, much higher as well, right? You don't want it to keep dropping. Okay. Well, where would you decide is enough? If you wanted to say, okay, no more of my profits go away, what level do you have a level picked out that you would say this is enough? I'm happy enough with my profits. I don't want to watch them go away. Because to the upside, that's uncapped, right? Our brain doesn't do well with variable profits. But what we can do is we can determine, like, you can move your stop loss up, right? Because you can always get back in, and there's always opportunities in the market. What we don't want to succumb to is sunk cost theory or sunk cost fallacy, right? And that's where just because we've had it for so long, or just because we have a nice low average, that we have to hold it. Because if that average gets retested, guess what happens? Your position goes back to break even, and that's not fun. So if we look at it, if your average was down here, right, about maybe, let's say you got in around $2, okay, you've had higher lows since then, except for recently. Plus the whole Iran-Israel situation is about to pop out. Well, it is popping off. It's about to escalate potentially. You've got a level here that's acting as a chop zone, right? And then you've got a kind of an upper range about here. So, at the end of the day, none of this stuff really matters. It's really just where the market wants to go, and you're either in or you're out. That's the only thing you can control. So if you have a defined cut point, like if you didn't want to lose your profits below here, that's still 100% profit. It's up to you to determine that, and you can always get back in. You can always trade stuff. It doesn't have to be buy and hold forever. They got a 63.32 PE. They got a 9.51 forward PE, according to FinViz. Obviously, FinViz is kind of trash. So let's look at their 8Ks. Let's look at things that they have going on, just to see what's going on. So they got a vote coming up. They got their earnings was on May 1st. So they'll have one of those back in August. Well, coming up in August. They changed their account. Not a big deal. I'm really looking for any sort of dilution catalysts or any kind of, here we go, departure. That's okay. It's pretty common. I'm not going to look too far into all this stuff. Entry into a material definitive agreement. So that means that they're potentially taking on debt, or they're agreeing to sell something. Unregistered sales of equity securities. So that's an off the books equity sale. Okay. And these are back from 2021, so you're fine. All right. So if I look at this 8K here, looks like they held their meeting on May 13th, and they are changing their accountant, and this is the results of their votes. Okay. 3 Class 3 members of the board to serve till 2028. Okay. Don't know any of these names, but we can Google them. Looks like they had pretty good vote ratios here. Broker non-votes. All right. Okay, so we got a little executive officer compensation thing. We got some accountant changes. Looks like most people are for that. That's good. Okay, not really anything important in this one. Then I look at the next 8K here. This is from 2022, I believe. This is the important part right here. Company and seller, right? Just keep reading all that stuff. So they filed a registration form S3. So that's an off-exchange sale of securities, equity, to permit the resale of common stock issued to the seller. Okay, and then they list it out here. And this kind of just lists out all the stuff. We don't really have to worry too much about reading all this stuff. Use and suspension of use of shelf registration statement. So they had an open offering. And let's see, okay, 90 days, 12-month period. Okay, so the only thing I think I would worry about for this one is just an announcement of private sales, right? Are you familiar with that stuff at all or no? It's okay if you're not. We're also going to look at stockanalysis.com just because I don't feel like pouring through the 10Ks. Otherwise, we could go through, and we did it in Trader's Paradise, and it was excruciating for them. So just going to do some very brief financial stuff. Revenue growth is red. That's not good. That's kind of a red flag in my opinion. Operating income is kind of variable, right? So a little sketchy there. EPS diluted is negative for most of the time. That's not good. Free cash flow is pretty variable here. It stays positive, post-COVID, obviously, but it's pretty variable. So I'm not too confident on that one. So we'll see. I don't want to roll anything out just yet. I'm just kind of looking at stuff. Cash growth is good. I like that. But then we got to consider that with the free cash flow. Like if they're making cash fist over fist, their revenue is declining, their free cash is variable, their cash and short cash growth is positive post 2022. We got there's some stuff we got to look at, right? So if we look at their total current assets, it's 487.65 million. Total assets is 990.74 million. So that's not bad. So they got about a 1-to-4 current ratio, and then they're a 1-to-3 asset to total asset to total liability ratio. So I'd say this is kind of middle of the road, right? I wouldn't really say it's good, but I wouldn't say it's horrible either. I mean, there's some obvious gaps here in the way they manage their money, and maybe that's why they changed accounting firms. So maybe that'll improve. That was also in 2022, I believe. But like this right here, free cash flow growth being negative almost 70%, that is a wild swing compared to 105% up and 76.78% up. So there's a lot of violence here in their free cash flow, which means that they're probably onloading and offloading a lot of debt. So I think I'd be a little bit more cautious with this one, holding it long term. And it looks like they also filed, oh yeah, S8, that's fine. And there's a specialized disclosure report. So these are always worth reading. Looks like they're going to, okay. So they got some conflict, blah, blah, blah. That's all good stuff. Okay. Okay, so Oil States was not able to determine where any conflict materials that it may have received from these suppliers may have originated. So they had some compliance issues. They weren't able to accurately identify the source. Think of it like a food recall. They can't figure out where the list area is coming from. So that's not good. So they may be facing some regulatory fees. Who knows? They performed a good faith RCOI. They're never going to get an answer on that. So that was May 29th. So at this point, it's just kind of a balancing act. So we've got the, you get the Iran-Israel conflict that's going to, in theory, boost all energy and all oil. Then you've got obviously just the general cycle, right? Because we're heading into summertime, mid to late summer. And then you've got the, the financials, right? Because this thing, it's got kind of an oscillating plus minus for the cash flow. So if they do really well at the same time, some of these other catalysts attract institutions, you might be okay. It might continue to rally and all that. But I would definitely, if it were me, right, I can't give legal advice here. If it were me, I would look for a very specific cut point just in case, given the red flags that are on this one. And then I would say if it goes below here, I will just walk away with the profits that I've made and not succumb to sunk cost fallacy, and I can put that money to better use elsewhere. Does that make sense? I know I just rambled a lot. And I also know I kind of went through it really fast. Still here. Okay. Did you have any questions about the stuff I just rambled about? And does it seem like a good idea to maybe have a cut point just in case? Because the upside's uncapped, right? You can always just let that run up as high as it wants. My job as a professional manager of risk would be to identify an area where I'd no longer be willing to let it go below. And then worst case scenario, right? Let's say it pushes all the way down here and then it comes back up and we say, oh, Pookie, you told me blah, 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 blah. You can always just get back in, right? You had no questions, just going to keep a very tight eye on it and create a mental stop loss. That's perfect. Yeah, as long as you can respect that and don't like second guess yourself in the moment and say, okay, well, maybe I'm okay paying a little bit more to the market because that's something our brains do. Then yeah, I mean, I feel like that's a pretty solid approach. I mean, you've had a lot of opportunities here if you just wanted to get in and out and trade just the upside. There's a lot more efficient opportunity there as opposed to just buying and holding, if that makes sense. But everybody has their own, their own preferences and their own skill set. Like if you don't want to look at charts and you don't want to just do the in and out stuff, you don't have to by any means. But personally, I like little red candles and I like color changes. So if I see something beautiful like this, or even like this back here, I like those clean breaks of price. So, we can also do the 5 candle rule and get in right there. And then the price just goes up. We capture, almost 30% in a couple of weeks. I mean, it's not bad. And then we get another 5 candle rule right here. From there to there, and then the color change happens here, so that would be right there, and then the the profit potential on that one would be about 55.5% in about a month and a half, 2 months. So buying and holding definitely has its place if this is one that's stable and strong in your opinion. I like it, but I don't personally see the strength. I see a lot of potential weakness and a lot of uncertainty. Now, because there are, it was 82 or 85% institutional investors, that's good. But I feel like unless you, let me just rewind here because I'm talking over myself here. Because you have a nice low average, that kind of works in your favor because they're gonna want it to go up the valuation and all that. But if you didn't have that average or you wanted to use that money more efficiently, then it'd be a lot harder to justify holding that with that much institutional ownership, because ideally we get in when the company is that low, when it's got good, strong financials without all those chops coming out of it. And when the institutional ownership is low, we get in first, right? Around 10, 20%. And then they pour in over time, they accumulate. If you're going to do a long-term high quality valuations on like a growth stock, that's the best opportunity is just get in before they do. Let me just read this real quick. I've been a longer term investor with most of my stock picks, and I'm just trying to capture more opportunities than I have in the past couple of years. Okay, beautiful. So let me ask you a question. As a long term investor, do you have a diversified portfolio across all sectors? And do you have weights in the stronger sectors? And do you have hedges, like passive options hedges in place for volatility? I should say directional hedges, because I don't want you to just keep it perfectly flat, because then inflation is going to destroy you. So personally, what I like to do, and this is kind of what we did in the rags to riches section, we made consistent contributions over time, obviously, right? And then we took about 70% of that and we put it into the long-term investments. In that case, we focused pretty heavily on dividend stocks. And then the remaining 30% we used for speculative stuff. Now, some people like to use 80%, 20%. Some people like to use 90%, 10%, or even 100% and no speculation. And then we broke into those two groups, right? And then for the 70%, you can do like equal allocations. You can do a weighted allocation based on sector rotation. You can allocate a portion of that for hedges and things like that. Okay, so you're mostly oil and tech. So I think tech and oil have a pretty good future. Obviously, oil short term, tech long term. And then the speculation was completely separate. So if we didn't want to speculate, we didn't have to. But if we did, that was where we kept the super tight stops and we got in and out. For the investments, like something like this, I personally wouldn't have put in there only because there was that much risk. Like there was a lot of red flags on the financials. And when we look at those, we're typically not looking at the charts unless we're just trying to fine tune our entries. Now, one thing I didn't check for, let me just pull this up over here. Does this one have a dividend? A dividend? It does. No, it does not. All right. So in this case, yeah, I mean, the only thing you're relying on here is the market potentially bringing it to valuation, which the valuation is, it's not that great, because there's that wild swing. It's just a chaotic environment for their cash flow. And it looks to me like what I saw in the books there is it looks to me like they're shuffling things around to make it look better than it is. So it's a little bit of a red flag for me personally. Tammy, hi, Poops. Is there a way to listen without watching the video stream? Wi-Fi on the plane not strong. Oh yeah, you're on your plane to Alaska. I can't talk today. But maybe to just listen. If anyone knows how to, or type how in the chat. I think you can just listen to my mic and not do the video, I think. I'm sorry. That's originally why I just had the camera on and not the screen share. But we'll definitely, hopefully get you a solution there. And also, oh my God. So I like to look at this. Oh, make sure you do it on the mobile. That sucks. I'm sorry, guys. You can do the YouTube. Let me get you that link. Put the YouTube channel on there. There's going to be a delay, but I'm not like actively scalping stuff right now. So here, I'll put the link in the chat for you. Now that's obviously also video, but you can drop the settings all the way down. Maybe that'll help. So on the screen here, we got Mr. Dude, who's one of the Rags to Riches besties. But every week he likes to share this, and I am super proud of him. So this is his net gains on this account. And this excludes net contribution. So it doesn't include the money that he just keeps adding in consistently. It's just dollar for dollar growth. And this is pretty insane because he doesn't have to work for it. He just puts money into passive positions. This is like his 70%. It's just sitting there and growing, which is beautiful because then he can just reinvest those, right? And then his rate of return. Now this took a pretty big hit at the start of the month. I think a lot of people's did. Just because there was turmoil in the market, but he's right back up to about 7% up for the year, which is about 3.5 savings accounts worth of interest in half a year. So last year, I think he ended up about 30% or something like that, and didn't have to work for it. So thank you very much for sharing that. I love it. And this is where I'd like to see more people start. I don't want to see people just going on like the 1 minute chart or trading SPY 0 days and things like that. Because if it ain't working, maybe it's time to have that talk with yourself. It's not a fun talk to have, but it's worth having. So let's go ahead and look at PCSA here. So the problem with stuff like this is that, if you bought here, you didn't respect your stop loss, you're down here, you're despairing, you're having a hard time. And then you see the price come back up here. There's only two outcomes there. You're either in or you're not in, right? And if you're in, what tends to happen for most people is they would have endured all this drawdown, and then the price would have come back up and they'd get rewarded. And then that's going to cement that risky behavior. And then the next time, it's only a matter of time, obviously, before it doesn't come back up. And then that's going to be a very difficult time. So personally, I like to just keep my risks nice and tight on these. And then that way, if it comes back up, like I said, I can always get back in. There's a 5 candle here. There's a 4 candle here. There's, I'm sure if we pull up like the moving average stuff, there's always some justification here. So there's no, is that 20? Yeah. Okay. So there's no 20 MA entry on that chart. And that's okay. There is a Harami squeeze right here. We can always do that if we want to, but we don't have to endure, we don't have to take this bullying, right? That's all this is. It's just bullying by the market. Sorry if I put that in front of the camera for the recording there. Hopefully you guys can see it. I was talking about this big red candle here. This just doesn't feel good, right? So if you're trading the low float stuff, you know, especially in the pre-market, because if you look at this one, you know, we happen to grab a profit on this one, but you know, this one didn't come back, right? So if you look at these two stocks, you got the same thing, but different outcomes, right? This one drew down and it happened to bounce back up. This one drew down and then it just kept falling. So maybe it comes back up, maybe it doesn't. We don't have access to that information yet. But I'm going to look at the chart in real time because it's always right in hindsight. And I'm not going to let that influence my decision making for the what if, right? I have to base my decisions on the what is. And, you know, I kind of hate seeing stuff like this because I know that there's traders out there that be like, oh, I should have held, I knew it, blah, blah, because that's just confirmation bias, right? You can always get back in. You can always take the opportunity cost, right? That's something that people struggle with because they don't want to lose. But ultimately, you know, that's what's going to keep you safe. I mean, I'd rather just break even on a trade than take a 20% loss for no reason, you know? All right, so PCSA is pushing a little bit, getting a little bit of volume here. Do I have, oh, you know what? I got to check this. Sorry. Sorry, guys. Give me just 1 second here. All right. Oh, we got a little bit of we got a spammer on Kick. You're in PCA up 50%. Beautiful, Chris. And you got to stop. Obviously, you know what you're doing. You've been with us for a long time. Are you scaling out of this the strength? Yes, sir. All right, beautiful. And you got a stop loss for all your shares, right? You're starting to stagnate right here. What's your plan? What's your plan? Don't panic. I'm just kidding. Good stuff. So you're kind of making a killing on this one. And that didn't involve holding all the way down here. Right? That's what it's all about. And I gotta keep moving this back over here because the camera on the recording's in the way. I was just talking about that red candle again. Let's look at CERO. So this one, Fergie pointed out, halted about 20 minutes ago or so. And this is beautiful. So for this one, right? What do we got right here? Lifers, right? What do we got? We got the 5 candle run, right? 1, 2, 3, 4, 5. And then we got a nice low risk opportunity here. Oops. I have to draw the lines. So if I were to draw that out as a position, where would I be taking profit? Or where would I be aiming for, right? Now it's a 3.75% risk range, which means I'd want to use the 1% rule, right? And that would get me a flat 1% or 3% based on the outcome. Chris M, just 20% of your position left, and then you're out. You're out of PCSA, right? Ooh, look at that. Nice little pullback. So you effectively grabbed that whole impulse. I mean, you would have had to, right? Because that's about 50% right there. So you got in right around here somewhere. Maybe the consolidation, right? Is that what you used? Your little profit goblin? Use a little wedge break right below you. Oh, use indicators. Okay. All right. There are many ways to skin this particular cat. So you got in like right here as it was pushing, maybe a break over highs. I love it. Good stuff, man. So the candle action, you liked it. Okay. And more importantly, you had a risk emergency plan, right? Had a tight stop. Beautiful. That's really what it boils down to. I don't want anyone to make their analysis super complicated. You know, you don't need lines or indicators or any of that stuff. You really just need discipline. And that's something that, you know, Tammy, when we were in Traders Paradise, I know a lot of you guys weren't there, obviously, but on day 4, what I did is I took the corporate actions, right? We just had it like this. And so I let them, we pulled up 4 of the attendees there, and I chose the ticker. That's the only control I wanted. And then we let them pick the entry based on just this. Like we didn't even have the order book or time and sales or any of that stuff. That was all covered up. All right. So So all they could see is this little list down here, the top gainers list. And then we had the order entry book or the order entry widget pulled up or something like that. I don't remember what it was, but that's all they saw, right? And then they chose the entry. I turned around, faced the wall, and then I came back over after Tammy picked the first one, and I got out. I just chose the exit. That's all I chose, right? It was a small loss, but it was a successful trade, right? It was like a 2% loss or something small. And then Tammy wanted to do the rest of the exits, and she loved it. And so then I think it was Chris. No, it was Latvian. I can't remember who the other one was off the top of my head. Anyway, they traded. I didn't. I just stood there and watched, and they traded without any information. There was no chart. There was no volume. No order book. No time in sales. This was all gone. All they could see was that P&L. Chag, Latvian, and Tammy. That's what. Yeah, I thought. And you. Okay, so it was Chag. That makes sense. I remember him now. Okay. But either way, that's all it was. And Tammy had a 67% win rate. I thought you were up there, Chris. Am I gaslighting myself? But either way, yeah, they killed it. And the large part of that is because, there was nothing else to focus on. They didn't need to try to be right. They didn't have all that information. And I kind of went over this yesterday in my live stream. Is that if this is your, let me just erase all these lines here real quick. Right? If this is your trade setup, right here to here, I'll turn off the view app and all that. So there's minimal information here. If I pull up Notepad and I just move it over here, right? If this is the trade between these two lines, okay, and you obscure it, you can't see it, there's nothing there for you to be able to talk yourself out of, right? Because that's what we're good at. That's our superpower as humans, is that we're able to have that inner conversation and kind of adjust the way that we view things. And that's what kept us alive. So we kind of need to be able to do that. But in the market, it gets used against us pretty heavily. So if the trade's in here in this box, right, and ignore these candles up here, let's say you got in where Chris did, right, or somewhere around here, and the price pushes up into this trade area, right, the surgical area. If you can't see that information, it's a lot less likely that you're going to be able to find specific reasons to talk yourself into getting out of the trade, right? So some people it's going to be more stressful, some people it's going to be less stressful. And that stress, if you feel it, is because there's a little drug seeker part of your brain that wants dopamine. It wants to close that loop, and it's going to try to find ways to get it no matter what. So you get anxious, you get a little bit impulsive, and then because he's not getting what he wants, he's going to throw a fit, and he's going to he wants the copper pipes in the wall, so he's going to take a sledgehammer and start going in there and grabbing them, and you can't let him do that. So you have to take the sledgehammer away, right? And that's only the result of, and this is kind of where it's interesting because you kind of figure out what kind of brain you have. That's only the result of that little telephone game that happens in our brain between seeing the stimulus and reacting to it, right? So for Tammy, for example, she found it a lot less stressful because she's very detail oriented. She's very present, and she doesn't necessarily need the details because she can prioritize. She can have that hierarchy. And what's happening there is she's taking her, visual cortex, prefrontal cortex, and she's overriding the conversation that's going into the anterior cingulate cortex. I'm talking too fast here. Which is responsible for weighing those things. It's the comparison. So there is no mismatch because she's feeding in something that matches what she's seeing. And that's just that number going up and down. Whereas someone like Austin was literally climbing over the table, freaking out. He was laughing in disbelief because it was stressing him out. That's because of the way his brain works, right? He's very, start to finish. He's got that whole conversation, everyone involved. Where you don't necessarily want that in the market because your amygdala is blind to the outside world. Now he's learned to control his and work with it. So doesn't mean he's got a disadvantage there at all. He's very successful, but it just means that he needs to understand the type of brain that he has. And I should say the type of conversations that occur in his brain. I mean, everyone's got similar brain type, but that's important, right? And that's why there's no one size fits all strategy in the market for people. Because you got people that can just cool, calm, and collected, just get up there and trade based off a number, right? Just a number that goes up and down. And then you got people that just can't, they need to control the process, right? And at the end of the day, this number here, if this was in the portfolio like this, it's no different than this set of numbers over here. If you guys can see the watch list, the recently viewed list on my Webull, each one of these is just a position like this. You just happen to not care about these, and you do care about this one because we're in it, right? So I asked everybody that was there in Trader's Paradise when I pulled up the chart and I started, we started getting into positions. I started asking them, like, do you feel any stress? Who's stressed? Raise your hand. And then even on day one, when we started doing that, people raised their hands, right? It was my account. It was on a screen that wasn't on their computer. It wasn't anything that they were in or anything like that. But for some reason, the brain, and this is kind of why I explained it the way I explained it in the room there, the brain still sees that as stress, right? Because it's proof that part of the brain that processes that stress is separated from the visual cortex. And that's why it's important. I'm rambling now. You guys are stuck with me. Sorry. But that's why it's important to understand this stuff so that you can get out of your own way, because most people just take things at face value and accept what is. And that allows you to become a victim of circumstance in the market, because it is set up to exploit everything that makes you you. And if you don't break that cycle, you're just going out, working your job and giving the market money for no reason. You're just stressing yourself out and wasting time. So I am here to break that for anyone who's willing to sit down and have that conversation. And if you're not, that's okay too. Not everyone's here to have make a different future. Some people just want to have fun, and some people just want to make a little cash, and that's okay. If you want to do that, we can trick out accounts and stuff, but ultimately it all boils back to the same thing. And that is you understanding yourself more than charts. And that's why it pains me to watch new traders just jump into charts and think that's the end all be all. Hey, what's up, Death Gun? How you doing? How's your Tuesday? You just caught me at the end of a super long-winded ramble. That's what I do. I'm doing pretty well. I'm doing okay. It's a good Tuesday. We got in and we got out. Just waiting to see what's going on with this NVIDIA trade. Traded a little bit of PCSA. Traded a little bit of ACXP. Grabbed a little profit on that guy. Took a little loss on this guy. Didn't get back in. Chris M slammed like a 50% profit on that one. And mostly I've just been rambling about psychology and stuff. How's your day? Actually, let me just check something real quick. I'll be right back, guys. Close that one. I don't need that open anymore. Sorry, I just had to swap my windows around here. Can you guys still see my Webull? I hope. Okay, cool. Thank you. All right, let's go ahead and take a look. So, if we look at Tesla, right? I didn't open up this one today. Looks like it did reject off that zone from yesterday, by the way. So I'm just going to go ahead and plot this out. So you guys obviously remember yesterday, it didn't really do much. A lot of these just kind of hung out in their ranges. Tesla's the same way. We look at NVIDIA. It's still kind of hovering around the zone. Now, I do like the zone because it's got some good strength coming out of it. So I'm going to continue to hold my contract. It's a Friday contract. But it's a similar process, right? We just have a different colored box today in a slightly different range, but still there's no break, right? Everything's just kind of in range. So we'll go ahead and grab a SPY. Do the same thing. I'm just going to erase these. Now it looks like SPY did have, let me just color code that. We'll come back to the 5-minute here. So this one did have a break. It had a confirmation to close outside on the 5-minute. So now we can look at the 1-minute for a retest and then a low risk opportunity for a call side, as long as it stays out of that box. Now, if it goes into the box, that's okay. If it goes deep into the box, that's not okay. So we'll just go ahead and wait. And this may just very well do the same thing that I think it was Tesla did yesterday, where it just blasts. Otherwise, we can go ahead and watch it. Let me just catch up on the chat. Fergie, I made a nice profit on CERO. Good stuff. And are you still in it at all or no? Are you completely out? I'm going to grill you a little bit, Fergie. We're going to ask some rapid fire questions, okay? Out from us 400. Beautiful. All right. So first question. Was your position size appropriate? Percentage-wise. Basically, I just want to figure out if your penny is going to move forward or backward today. And for those who don't know, the penny thing, you're going to see these on Fridays. I'm going to try to get everybody to share their pennies. In Chicago, I just kind of gave them all an exercise to do. And I kind of, anyone can do this, but we're going to be sharing ours. We're going to just take a row, okay? And we're going to have 5 pennies laid out. And then on each day, if you follow your trading plan 100% successfully and don't lie to yourself, that penny moves forward. Even if like Thursday we get a free one, right? Because there's no trading. So obviously the plan dictates if there's conditions you don't trade, right? So unless you go over to crypto just to get that itch, in which case, if you follow your plan, great. If not, you move that penny backwards. So if you deviate from your plan even once, you move that penny backwards. And think of it like say this is the sheet of paper here. If I have my 5, I'm just going to do these like this, right? Because I don't want to move the, I can't draw the boxes. All right, so here's 1, 2, 3, 4, 5. If today, let's say yesterday was a success, so I move that up. Let's say I deviated today, I move this down. And so at the end of the week, there shouldn't be any pennies on that midline. Okay, so I kind of encourage everyone to do something similar to that. But we're going to do ours very specifically at the end of the week. Fergie, it was larger than I used to use, but 50% of my speculation amount. So you're doing the 50-50, 2 trades a day thing, and then you walk away? You traded 2 equity trades and 1 option trade now at Amazon 215 call. Okay. So your position size is a little bit bigger, but does it fit your plan for today? It fit your plan. Beautiful. So in your plan, do you allocate for subsequent trades if your first trade was a win and it hit your goal? Or was that first trade supposed to be the good enough and then walk away? There's no wrong answer. I'm just curious. All right. You would like to, but you've entered again. Okay, so does which one does your plan say? Does your plan say that if you win your first trade, you're done for the day, or that you take subsequent trades? Maybe it's just a execution thing, but I'm just curious which one your plan is, which one that dictates. Then again, there's no wrong answers. Like if you win your first trade, you can very easily just make a rule that says that your subsequent trades are on smaller positions, so you don't give back those profits. There's all kinds of stuff. Okay, so you really just have it where you take two equity and 1 option, no more. Okay, so you're limiting yourself to 3 trades. And then maybe you could consider building in some conditional rules if you want to, right? I'm not telling you have to. I'm just putting the option in front of you because it's something that people just aren't aware of. Like I personally, if I'm using 50% of my account for 2 equity trades, for example, and I'm just trying to get 3% overall, and I'm taking profit at 6% on both trades, that first trade, if that's a win, that automatically hits that, I walk away because I hit my goal. That doesn't mean I have to, but there's some different avenues we can follow, right? Okay, so in terms of your plan, right, because you set out the day without that. You said like you didn't have that in mind. You just had 2 equity trades, 1 option, no more. So you've done that. 50% of the amount you have allocated for speculation. Okay. Now, no, that's okay. You don't want to over allocate. So next question, how did you feel about your trade from start to finish? Or did you have any second guesses? Did you write down conversations that you were having with yourself? Probably, right? It's most people do. Kind of like that. Feel good, although when Cyril halted, it was scary. Okay, well, fear's an emotion, right? And that's okay. What kind of, did you allow that to influence your decision making, or did you still follow your plan? And that's the hard question, because sometimes we don't really recognize when that's happening till after the fact. No choice. Fair enough. But you're out now, right? You made your $400 profit. Right, you can't. But did you, okay, so when it halted, you had the intention of holding to some point, right? And then when it unhalted, was that the same, or did you maybe just be like, I got to get the hell out? Like, did the halt itself trigger anything? Did it make you change your mind about how you're going to execute or anything like that? I'm going to go grab one more share here in a minute. Oh, it went up too high. Bummer. Oh, I got to change that. Oh, well. All right. So I put one share in, 6% take profit. I just kind of like the breakout. I'm going to read the chat here. Kenny Penny, halted on the way up can be a good thing. It can. It is still a halt, though, so it can go, it's like a 50-50. It could go up or down. There's no way to really reliably predict that. We just don't know. All out and all good. I put a bracket order when it unhalted and stopped out for a fat profit. Okay, and that's good stuff. We like those. But good. So you put a bracket order in place so that it kind of removes your decision making and potential for hesitation, right? That's good stuff. Okay. So what you did is you put yourself in front of a high potential, low risk opportunity. You used an appropriate position size based on your trading plan, based on knowledge that you had before the day started. You executed from start to finish, and you felt pretty good about it the whole way through. I would call that a successful trading day so far. You stopped at Amazon for a nice small loss, and you're done for the day. That's beautiful. So did you have any deviations today at all? That one on CERO just hit target, by the way. Or did you follow your plan 100%, start to finish, feeling good, feeling fresh? Not today. Beautiful. All right, so you get to move your penny up. You just increase the value of a single penny. That's insane. So how much was your, just in terms of percentage wise, unless you're comfortable sharing the dollars, what's your net P&L for the day? You don't need the real number, just a percentage, if that's easier. Yeah, no worries, no worries. Either way, it's more than a penny, right? So what you've done is you've taken the value of that penny today, which is your reason to follow your plan, and you've increased its value by whatever number that is, right? And you still got two more for, well, three more for the week, but two more you can actually use. So you should have one penny down, one penny up, right? Death Gun popped in to follow one of your trades, and I got a phone call halfway through. Was it the CERO one that we took? Because that was just a profit. I just took a entry, just a scalp on this guy. It was a 6% profit. It's a 7% candle. I use my hotkey. But don't copy trade. Like, don't just buy stuff because I'm buying it. If you have phone calls and stuff, obviously that's, you got to focus where you can focus. I got the call when I was watching SPY. So for SPY, there was no trade. We were waiting for a retest. There's no, I don't have an entry opportunity yet because I want the price to come down closer to this box. And then within this box, I want to see a small red candle ideally off the zone, right? And then I can take a disproportionately larger profit on the retest. But I need a small opportunity close to this zone if I want to trade that. Does that make sense? So I'm still waiting on this one. There's no entry. Not really. Well, okay. So what did you use to justify getting in then? Okay, I could break that part down. So you understand why you understand that we're waiting, but don't quite understand why. All right. So if we think about it, I'll redraw it. Right. We'll just start from the beginning of the day. Okay. So the market opens. Right. Everybody's fighting. The bulls are pushing. The bears are pulling. All that good stuff. Everybody's trying to have an argument. Right. Think about it like a presidential election. Everybody slams into the ballots and casts their vote. Right. And then they're counted, and you get some end result. Okay. So if you think about it like two people fighting, okay, you've got like they're just pushing and pulling. There's going to be a range where they're allowed to, like, where that scuffle covers, where it takes place, right? So think about it like sumo wrestlers, okay? One pushes one this far, the other one pushes the other one this far. This is kind of as far as they went on both sides. Does that make sense so far? They're like two elephants or something. They're establishing the ring, basically. A little more sense? Okay. So then what we do is we look at the 5 minute and we look for a confirmation, which is a candle close outside the box. Okay. And that's just someone getting the last word. Okay. It's the one pushing the other one out of the ring. Does that make sense? So like these guys are arguing. This one gets the last word, essentially. Okay. Now we come down to the 1 minute and we look for a retest. And this is like, after that last word, this one up here is still talking smack, right? So they're waiting for a little bit of a retest. And it's kind of like a, what'd you just say kind of scenario? And then the idea here is that the retest will just slap them down even harder because they already won the argument, right? This one's just trying to get the last word. And then these guys actually get the last word in theory, right? So in order to have that become a trade opportunity, that concept, we need a low risk opportunity on a retest of where they had that decisive victory, right? Like if you think about it, like trying to think of a good analogy here, like a battlefield, right? This is the field where all the killing happens, right? When this side loses, right? Like you've got your supply and you've got your demand, okay? They're going to push. They're going to push. I don't know why my Weeple's being so laggy right now. But anyway, eventually these guys get depleted and they go away. Then these guys chase them. I really hate Weeple right now. I don't know what's going on. Anyway, these guys will chase them as far as they can until they run into their next base, right? And then they're kind of pushed back to their last stronghold, which is the edge of the battlefield, right? Because that's where they're setting up all their stuff. So now these guys are going to dispatch a little force down here to this battlefield to try to kill them. And then they're all just going to keep charging and conquer that base. Does that kind of make sense? I probably should have explained that in a much more deliberate way. But that's the concept. We're just watching that push-pull, and we're waiting for a retest of that breakout. So we got the established range, first 15 minutes, and then we got the breakout confirmation. That's the setup confirmation. And then we have the entry confirmation, which is down here on the actual retest. And that's where we can look to actually get into a trade. And ideally that happens before like 11 o'clock because we don't want to have that go on too long in the day because then the volume falls off and it gets messy. How big is the retest range? That depends. Some stocks have a much bigger range in that first 15 minutes. Some have very small. It depends on the day. Like if we come back to SPY in the same, like see the size of this blue box, comparing that size from yesterday, it's about 30% bigger. I really don't know why my Weeble is being so weird. I can't just drag these boxes around. Okay, you still feel lost. Okay. Well, it's kind of it's a more advanced strategy, right? Because what you're doing is you're basically taking the opening volatility range and then you're waiting for a break of it and then a retest. So it revisits the range and then it confirms for a longer push in that same direction. So it's a little bit complicated. If I come back here to whatever day this is, and then we draw our 5-minute candle close right here, right? Because it closes outside the range. And then we come back to the 1 minute. And we scroll for days because we're on the 1 minute. All right. Like this is what we look for, right? We've got that 5-minute candle close after the 50-minute range is established. Then we look for a 1-minute retest. And then we've got just any of these little red candles that gets broken over. Like this guy right here is the one that actually got broken over. This one did as well before that candle closed because it pulled back down because that wick means that it was a bullish candle at some point. But any of these really counts. And then that's the kind of move that we're looking for. Just a big, strong move off. And what that leaves us is, is a low risk, high potential opportunity that we can trade, kind of any number of days in a row, right? So some days you're going to have profits, some days you're going to have losses, but the concept is the same. Okay. All right, Adrian, have a good one, man. I'm glad you're able to make it to this one. So for SPY, we're getting that push down into the zone right now, but the risk range is a little big, right? So if I were to take this as a long trade, I would need to look for a breakout over this candle, and my risk range would have to be here. And then I'd need like a 1 to 3, which is way too big, right? It's too big of a risk. So I don't really want to risk all that. So ideally what I can get is a smaller red candle somewhere around this range. Does that kind of make sense? Hyper Levine gifts. So like this candle right here, if this doesn't get too much bigger, this would be a perfect opportunity. If it just closes the way it is, and then we get a color change over that. Now, if it gets too big, that might be a little bit larger as well. So ideally, we just look at these candles back here and say, okay, like this range, perfect. This range, way too big. So I want something smaller than that, bigger than this maybe, or about that same size. Like this would be good. This would be great. Like this size range is perfect. That's all right. It's acceptable. This is good. This is way too big. Does that make sense? If I'm just gauging risk sizes. And this right here is also way too big. It's just kind of, this part's a little bit subjective, is how big do you want to make your risk? Now, the theory is that if we enter on the color change, like if we just get in right here, for example, the price should just keep going. So we could, in theory, just keep that stop loss like right there. So not a big deal at the end of the day. It just depends on kind of how many trades you might want to take versus how many you want to sit out. So if I were to look at this, since I already know exactly where my strike would be, I would probably look at like the 601 calls right near the strike, be about $100. So if I were to plot that out right here, we could just go ahead and watch this. And then I personally like to shoot, just as a rule, I like to shoot for about 30% on SPY trades. But there's no guarantee that's going to happen. But now we're looking at the contract chart and not the SPY chart, because what's going to happen is if we look at SPY, we're going to find all these reasons to second guess ourselves, right? And this is what I was talking about earlier. So instead of doing all that and talking yourself out of high quality trades, all we have to do is look at the actual price action on the contract, because that's all that matters at this point. We don't need the chart anymore, right? There's nothing I can do by looking at the chart that's going to dictate what my P&L ends up being. You know what I mean? I'd much rather just look at the actual profit and loss on the chart. Now I have this pulled up because I don't have an actual contract, but if I did, I would just look at that little red or green number. Right? And one more thing that we can do is we can change this to a baseline chart and we can do one of these guys and move this up here, and then we can assess how much time we spend in profit versus how much we spend in drawdown. And that's something not a lot of traders are comfortable doing because it's not fun, right? It doesn't give us that same reward. So if I were to, if I don't want to take more than a 5% loss or 10% loss, I could just set my stop loss right here because I know that's where the price was when the chart was around the low. But I'm really just kind of hanging out right here. I just pick my profit or my loss, right? Does that concept make sense? Like right here, I probably could have just gotten out. So I don't need the chart at this point. It doesn't make any sense to stare at a chart and say, oh, I should stay in because, right? And that's something nobody out there is ever going to tell you. They're going to be like, oh, you need to stay in until it's invalidated, blah, blah, blah. It doesn't matter. If you're buying with the intention of the price going up after you get in, it being down here doesn't make sense. Because you can always get back in, right? So if I go back to SPY right now, also, what do you think's happening, right? It's probably pulling down a little bit. But in some cases, SPY can move up and the contract will still lose value as well. It just kind of depends on how long you hold it. But is there any reason to still be in that trade if I would have taken that entry? Absolutely not. Not in my opinion. Fergie, belated answer, but you made 13% on the serial trade. That's beautiful. So you took 1 penny and you set it aside and you said, okay, today, penny, we're going to move you up. And as a result of that, you have 13% overall ROI for the day, or 13% P&L on the dollars invested for that trade, right? That's pretty solid. So Fergie, you have 1 penny down, 1 penny up for the week, right? Beautiful. Do you feel a lot more confident about that than like a month ago? And does this part specifically make sense where we're not looking at the chart, we're just looking at the P&L? I like the baseline chart because there's no candles. Like there's no story being told. Right? So when we look at candles, we like to tell ourselves things, right? We like to say, oh, you know, it's got a bottom wick, so the price is coming back up, blah, 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 blah. Ultimately, none of that matters because the price is what it is, right? I don't need to know any of the other stuff. I'm just looking to get in or out. Definitely happier about having the rest of the day free. Absolutely. This should be a side hustle. I say it all the time. This is a side hustle that impacts your lifestyle. It shouldn't be a lifestyle that makes you have to go out and get side hustles, right? So if you're just constantly soaking up losses and they're huge and uncontrollable and you're depositing paycheck after paycheck, come talk to me because I don't want you guys to have to do all that. It's not worth it. You have a life and you have time. You can spend it outside the market or you can waste it staring at charts and convincing yourself that you need to in order to be successful. Does anybody here use the baseline chart? Besides maybe Kenny Penny. Oh, I gotta move this back up here, sorry. All right, what you can also do if you want to drive yourself nuts is you can change this to 1 tick. You can't do it on options, but if we go to SPY, right? And then we pick a level, like let's say this right here. Let's just randomly say this is our level. If I zoom out and I just put this price over here, this just tells you like every order that's filled as it's filled. And I'll just compress this and then move it back up here. Like the goal of our trading is to spend more time up here in profitable territory, regardless of what that level is that you've been watching or whatever your justification is. And not have stuff like this happen. So this is what takes people out of the market. It's not going to be this stuff. So if your goal, again, is to get in when the price is doing that, and that's what's going to make you money, but somewhere around here, it started going down here, and you're still in it, you really got to think about why you're doing what you're doing, you know? You think it's halted again? Which one? CERO? Oh, what's up, Porter? How you doing? Let's look at CERO. Oh, yeah, it's halted. Halted AF. So where did I get in? Where was that? Where was it? 1719, right? So I'll just draw that line. Ooh, it's way down here. Okay, 1719. Okay. So that's kind of where I got in. And I'll probably have to change these ticks a little bit. So 1 tick is a little bit too egregious. So let's go back to 42 ticks. All right. And what time was that? That was about 10:26. Okay, so right around here. So it was around here, right? We got in like right there somewhere. Oh no, I guess it would have been because it just kind of went straight up. I don't think it was red. So this is the kind of setup that we want to put ourselves in front of consistently, right? And not everything, like we don't control that, right? And this is kind of the point I'm trying to make here, is that sometimes you're going to have trades that look like this, and a lot of times you should if you're waiting for certain things to line up. Otherwise, you're going to have a lot of trades that are kind of doing this, right? And if this is where you're entering, right, and you're not exiting like right here, and your goal is to trade it that way, and instead you're down here or down here or down here, right? It really, really can be discouraging, and I hate seeing that because I know how it feels. So we can fix that. Okay, is anyone currently in CERO right now? Just curious. I guess any of the other top gainers there. It just changes back to 1 tick. I'm telling you guys, if you can get used to using the baseline chart with ticks and your entries, you're probably gonna have a much better time. So if I just wanted to use this level right here, just this random level, right? Would I still be in that trade? I didn't really wait for the price to go up, right? I just kind of plotted a level. But would it make sense for me to be in it when it's down here? I got it. I'm just going to scale up here. Does that make more sense? I would say probably not, right? Because again, my goal is to trade it up here, but it's going down here, and it's only 1 cent, right? So, and that's worth discussing too, is if you're trading these little sub-dollar stocks, 1 cent can make a pretty significant difference. That's already 2 to 2.5% right there. And if I just want a 1% risk tolerance, I have a hotkey set up where I've got a 6% take profit, 1% stop loss. You don't need to win every trade. I've already gone through the math. If you can win 3 trades out of 10, which again, if you're trading when the price is moving up, it should be pretty straightforward. Like I did on CERO, it didn't require a whole bunch of brain power. I just waited till the price is moving up. I'll switch back to regular candles. I'm sure you guys probably hate that. I just waited till the price is moving up and I caught a piece of it, right? 90% of that is just telling yourself you don't need to catch the whole thing, and then just walking away with what profits you do get and understanding that those are good enough. Now, could I have stayed in? Could I have, locked the majority of my shares and let the remainder run with a stop loss below this candle and then moved up with, very mechanical strategies like the higher validated low, since we've got 2 candles to the left and right, we got a 5 candle run, another higher validated low, another 5 candle run right there for another partial stop loss, blah, blah, blah. We can always do that stuff. We can always scale into that. And these are not new. Like I'm not just pulling these out of my butt. They're stuff I've been teaching for over a year. But for the sake of this stream, I just want to show you guys that just getting in and out is where it starts, because the getting out part is the hard part. I don't doubt anyone here in their ability to get into a stock or a contract. The analysis should be pretty straightforward, pretty simple, and the psychology and the execution should be the hardest parts. So if your analysis is the hardest part, you're distracting yourself, because that part should be super easy. But getting out can be damn near impossible sometimes, because we got to consider, we got to plot for 2 levels, right? At least. And then we have to figure out why we can't push the button when it's up here in the moment. That can be very difficult because you've got all kinds of emotions and thoughts and things flying around, and it's very tough. So you kind of need some structure to help sort through that stuff. Oh, you're good, Death Gun. Sorry, I just saw your message. Is this stuff kind of making sense? Like if you guys just want like a stupidly simple strategy, it's very simple. See this red candle? Boom, that's a strategy, right? Very easy, very simple. Now that's confirmation bias because I did it right in front of a run. So let's go ahead and go back. And let's look for an example where it didn't work out. I got to go back a little farther. Sorry. Let's use let's use this one. All right. So you see this candle? This little red candle. Well, you guys probably can't see past that camera thing in the recording. This little red candle right here, overall big strong uptrend. Right, we got a breakout right here, and then it would have stopped out. Is that going to destroy my portfolio at 3.22%? Especially if I use the 1% rule? Absolutely not. Can I make up for it right here on the next trade? Absolutely. Right? Do I have access to any of that future information? No, I don't. Can I limit the number of trades that I take and limit the position sizes so that it makes sense and I have disproportionate take profits and all that other good stuff? Absolutely. You know, my job is to manage risk. It's not to look for accurate guesses, you know, because that doesn't work. Sorry, I got to drink more Monster here. Delicious. So with that said, let's take a look at SPY real fast. And we're down on the 1 minute here. Okay, so we've got, like, this is a good opportunity right here. Like, I like this guy, but we weren't really looking at it. So let's see if we get another red candle here. Now this one kind of pushed a little bit far down in. So I might feel a little bit more comfortable if we see another 5 candle close. Okay, so we did. So we see another 5 candle close outside the range. Now we're pulling back to test it, but this range is pretty big. Okay, so we're just waiting for the right opportunities here. And if we don't see an A+ setup, we're not going to take it. Death Gun says, even that didn't make sense to me. Which, what part didn't make sense? The red candle stuff? Yeah, okay, cool. Well, that's good. That's an opportunity here. So I'm just going to pull up a random chart. We're going to go up here and we're going to do some art. Okay, we're going to fix this right now. All right. So you see this right here, right? Pretend that's a red candle. Make sense? And you know what? Actually, I'll draw a wick, right? We like wicks. Okay. Red candle has a wick. So the opening price is the top of the body on a red candle. The closing price is the bottom of the bottle. That's the body. Sorry, that's the rectangle part, right? It's got a little chunky body. And then the high and low are the top and bottom of the wicks. Are you familiar enough with that? I guess I should put it over here for the recording as well. Sorry. That's the easy part. Okay, so what this represents is the price opened here, went as high as here, as low as here for some period of time, and then closed right here after a fixed number of minutes or seconds, right? Some period of time that's defined, okay? So this is the total range, and this is the progression range. This is how much ground they gained, right? And there's various combinations of these. You know, we got the dojis, we got all that good stuff, hammer candles, it's all BS at the end of the day. Don't let anyone tell you I said that, but or don't tell anyone I said that because they're just going to get mad and try to argue it. So at the end of the day, this is what this represents. Now, if I take the opening price, the top of the body, and I draw a threshold, okay, and I take the low and I draw another line, okay, and it's my goal to take an entry when that price gets broken over, I have defined risk, right? I guess I got to move this up to the actual low of that candle, right? So the price opened here, went as high as this, as low as this, closed here, and then the next candle opened up here, and then it pushed up. Does that make sense? Okay, so if my goal is to look at where their last stronghold was, the bears, okay, and then price pushed down, made some sort of low, and came back up. So if I start a stopwatch right here when this candle opens, and I stop it when this candle breaks over that, I have some range that the price has gone between those 2 points in time. Does that make sense? And overall, what the price has really done here is it's just kind of gone down and then it's kind of gone back up, right? So all I care about is this breakover for this specific strategy, right? Okay, so with that said, this risk range is defined. Okay, it's a finite value. It's something that I can identify and control. Now, this is either bigger or smaller than what I'm willing to tolerate, which is my risk tolerance. Does that make sense? So if I don't want this to be more than like 20 cents, I don't have to take that trade. If it fits within my range, my risk tolerance, then I can look at it for an opportunity. But I need to take this range, okay, and then multiply it to the upside so that I get a disproportionate take profit ratio. Because I'm going to enter here and I'm going to stop out down here. So I need to make sure that when I win, it outperforms those losses. So far, so good. Hey, what's up, MJ Youngest? How's it going, man? But yeah, right now I'm kind of helping one of my community members here. We're just teaching a very basic strategy. Does that make sense so far? All right, cool. And what this does is this establishes a ratio, and this is your risk reward ratio. So if this is 3 times the size of this, right, your profit range is 3 times the size of your risk range, that's a 1 to 3 risk to reward ratio, okay? And if you run the numbers on that, you use equal position sizes, blah, 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 you only need to win 3 or 4 out of every 10 trades in order to be net profitable. So 3 trades is like above break even. 10 trades, you get up like a lot, right? So this is the basics of that strategy, okay? And then there's any number of other factors you can build on top of that, like making sure it happens off of a like a 20 MA, like a moving average, or making sure it comes off like the SPY, that retest zone that we were watching. Does that make sense? I don't know where my box went. Oh, because I didn't extend things. My bad. Let me just extend that back to the right. Sorry about that. Right. So if I look for, you know, like let's say that the candle closed here in the 5-minute, candle closed here in the 5-minute. I'm just going to erase that because we didn't get any lines over there. Now, if this was the most recent 5-minute confirmation, meaning we got a candle that closed above that argument zone, then I come down here to the 1-minute. I want to see one of those setups. I want to see that small red candle and then a bullish candle that overtakes it above or in the upper part of this range. Does that make sense? Because I want it to push down into this zone and then retest, confirm, and then I want it to reject violently to the upside before I take an entry to the upside. And in this case, what's happening here is it's just pushing further down into the zone, which means it's not rejecting. It's not holding that as a support, which means I don't take an entry. I just back off, right? Now it's this far down, which tells me the 1-minute time frame isn't showing me strength. So I have to come back up on the 5-minute and wait for that confirmation out of the zone again, so I can get that next retest opportunity. And then that might be my run. Otherwise, I just keep passing on it. Okay, so all I'm doing is filtering stuff out and telling myself not to trade just yet. And if you want to take that and make it even a step dumber, right? Just like zero analysis, right? I do this all the time for you guys. I let you pick a random ticker and a random date, and then sometimes I'll let you pick a random time frame, but I have to kind of optimize a little bit so the data is clean. And then I just show you guys that ratio at that level every time the price breaks above it, and then we track a series of 10 trades, and then it's either a net profit or a net loss, but it's usually a net profit because of the disproportionate risk reward ratio. So why don't you go ahead and give me a ticker? Am I down for a follow? Yeah, I can't really log in right now to my kick. I'm just streaming through StreamYard, but yeah, I mean, if you want to follow, I'll follow you back. Absolutely. Are you in the market? You a trader? Let me also, I'll put the link in here. If you are, I'll put the link in that our channel here, and feel free to hop in the Discord. I'm here all day. It's 100% free to join the free part. We'll just hang out. I'm PookiesRevenge. I live trade Monday, Tuesday, Thursday, Fridays. Mad Maverick trades on Wednesdays. All right, EYEN. All right, so this is the parlor trick that I like to do. So you pick the ticker, someone else pick a date, just a random date, ideally within the last, I don't know, 5 years, 4 years. It just depends on how far back I have to scroll. Or you can pick, it doesn't matter to me. Or we can let ChatGPT. It don't matter. I think we might have already used this one. I will come back to the 1 minute so that the data pool is not contaminated. Yeah, just give me a random date and then a number between 1 and 4. A dollar amount between 1 and 4. March 16th, 2023. 2 is in just $2. $2. Okay. So what I'm going to do here is I'm going to put a line at $2. Well, actually, let me erase all the lines on here so we don't contaminate. And then I'm going to make a green line, or I'm sorry, a yellow line here at $2. Okay. And then what I'm going to do is I'm going to draw another one at 2 minus 1%. 2 minus 1% is $1.98. Okay. So 198. Okay. And then I'm going to draw another one at 2 plus 6%. And that's 212. So 212. Okay. So what I've done here is I've drawn my entry threshold, stop loss, and take profit levels. Okay. So now we're going to go back to March 16, 2023. I'm just going to go back here on the daily time frame. Now I'm just going to adjust the colors of these lines. So ignore that real quick while I just change these colors. And then March 16, 2023, you said? You're going to be scrolling for a while. This is live trading. It's a live stream. March 16, 2023. Sorry. So I kind of set you up for failure. You want to give me a different number that's a little bit closer. How about a number from 1 to 50? We'll do 1 to 50 or 1 to 100, whatever. I'll erase the lower lines there. Sorry about that. I wasn't looking at the past numbers. And that's just so we have a range to work off. $25. Okay. So 25. All right. And I'll just do the same thing, right? 25 minus 1% is 24.75. Okay. And then 25 plus 6% is 26.50. Okay. All right. So starting here on March 16, 2023, why don't you give me a time frame? Yeah, right now I'm back testing to demonstrate proof of concept. Sorry about that. Why don't you pick a time frame? I would say like 30-minute or above. I don't really like the one, like this one just doesn't have good volume to make it. We could just stick to the daily time frame if you want. It's up to you. I'm letting you control the parameters here. That's what makes this fun. And I'll open up Notepad as well. Okay. Little goat, do you think if I follow everything he does when he trades, I can profit? The answer is no, because I don't want anyone to copy trade me or anybody else, because there's a couple of things that we have to consider. First, I may have to cut the stream off, in which case you might be in the middle of a trade and then you'd have to make your own decision. And without the education, there's no guarantee that you're going to make a profit. Also, there's no guarantee I'm going to make a profit on any given day. And you might not be able to trade every day that I trade. So I know I make a net profit. I know I've been doing this for 15 years, but circumstances don't always align. And there also might be a little bit of lag. You know, there's all kinds of stuff. We might get different fills. Copy trading just doesn't work, primarily because a lot of people just can't execute as well. So I don't recommend it. But if you agree with the stuff that you're seeing and you can justify your risk and you can manage your risk, then I mean, I can't stop you, but I would much rather focus on teaching you how to do this for yourself so that there's fewer limitations and that you can make your own decisions in real time with confidence. I'd much rather you guys do that. Let's do daily, I guess. Okay. Okay. So on March 16, 2023, we pulled up this chart. This is what we would have seen on the daily time frame. We put a level down at $25. We did a 6% take profit, 1% stop loss. Okay. So 3/16/2023 daily, 6% TP, 1% SL, and we're going to look at 10 trades. Right? Is everything fair so far? Death Gun, you technically can, but that isn't advised. This is more for learning to trade on your own. Yeah, I mean, you guys can always copy if you want. I just can't. I'm not going to sit here and tell you, yeah, if you do everything I do, you're going to have the same results. Like, it doesn't work like that. That's why I hate seeing those like gimmicks out there, you know. All right, so everything is pretty fair, right? I've let you essentially shuffle the deck. Okay, you're just putting me in a room and I have to figure out how to manage my risk, right? Everything's been called out ahead of time. So we're on the daily time frame. We're going to look at a $25 entry, and we're going to look to enter when the price breaks above that level. Let me just change that to a yellow color. Right? That's all we're going to do. We're not going to do weird stuff. We're not going to use a strategy or any indicators. We're just going to wait till the price breaks over the $25 level and then look for an entry. If we get one, it may not even, no, looks like it didn't even come back up. Oh my God. Sorry, I didn't realize that was in there. Let's do a different way. Let's just plot a random level somewhere around here. Is that fair? 10 bucks. I guess I should have looked at the chart. I try to do it without looking at the chart, and then sometimes we just get these weird things where it's like a massive sell-off. Does $10 seem fair? We'll just do a flat 10 bucks. Okay, sorry about that. Let me just change this as well. And you okay to just start here in November 2024? Or do you want to go back? I don't like this chart. I can't find a place where the price was even retested. So, oops. 24. Okay. All right. Sorry about that, man. So November of 2024. Okay. So we're just looking for the price to break over the $10 level. We're going to do a 6% take profit. So let me just draw these lines out one more time. Sorry about the delay here. All right. So 10 minus 1% is 990. Okay. 990. That's a nice tight risk. And then we'll do a 10 plus 6% obviously is 1060. We'll go ahead and draw that 1060. All right. So same structure, right? We're just letting you pick the stuff more or less, or at least agree to it. Unfortunately, we had a little bit of wonkiness with the chart. Just looking for the price to go that way. Okay. That's all I care about. Now, if it happens to go up here, and then it happens to shoot back down there, I've got a risk in place. And let's just assume that we're going to use the full portfolio for one trade at a time. Okay. And then one other caveat that we have here is that we don't know if the price might have done one of these throughout the day. So we'll assume at least one loss per day. Is that fair? So for this one, it's going to be a loss no matter what. And I've got the notepad pulled up over here in the other window. That's why I'm like looking back and forth if you guys are watching the recording here. So that's a loss. Okay, so one loss. I think we can count that as a win, right? And then this one here is clearly a loss. Now, I don't know if the price might have pulled back, so we'll just assume it's a loss, right? So we got one win, we got one loss. Well, this would be over here, assuming we're looking at pre-market and stuff. This is a loss. Okay. All right, that's a loss right there. That's a win. And it's hard to see because these big candles, and I kind of hate this chart. But if you guys can see that wick right there, you see it did pop up and then it pulled back down. So that's a loss. That's plain and day. This is a straight shot, so we'll count that as a win. All right. And then we take another loss here. So this one, the reason I'm calling this a loss is because it did have a wick up here. So we'll just assume that was a loss. Okay. All right. That's a loss. Oops, sorry, I'm switching between my windows here. Okay, and then I don't think the price came back to 10. I'm not sure. Nope. Okay. So we got 6 trades. All right. So let's just assume we got 6 trades here. And we got to change this to November 2024, daily time frame, all that good stuff, right? So what we can do is we could say this is minus 1%. This is plus 6%, minus 1%. Oops. Minus 1%, plus 6%, minus 1%. Okay, seem fair? So we've got 2 wins, 4 losses. So a pretty atrocious win rate in terms of what you're going to see on YouTube, right? So if I pull up my calculator, let's just say for funsies, we started at $1,000, right? Just for fun. Minus 1%, plus 6%, minus 1%, minus 1%, plus 6%, minus 1%. We would have a profit of $79. Okay, 79 divided by 1,000 times 100 is 7.9% up in 6 trades. with a 33% win rate. Does that seem fair? That's weird. I don't know what's going on with that car. I don't know if you guys could hear that on the recording or in the Discord. All right. Was there any sketchiness that you, okay, so the calculator was over here underneath the camera on the recording, so you guys will just have to do your own math there, but it came out to 7.9%. But did I do anything shady here? Was I cherry picking results? Was I, changing the analysis or the justification after the fact to say, oh, no, it was actually a win, right? Did I do any of that stuff? What's up, Elton? I'm glad you're here, man. How was your week, by the way? Your last week? Did you get your trial yet? I'll put the link in here, by the way, because I think you had yours, but I want to make sure everybody gets access to that. But I mean, I feel like I was pretty fair about that. Did I do anything sketchy or anything that could be scrutinized here? I didn't use any analysis. You did a trial. Okay, I'm glad you had a good week then. We'll be here when you're ready to jump back. Last week we didn't do the trial. We just held everybody on the wait list because we were in Chicago. So I just want to make sure you didn't get I want to make sure you didn't lose any time, right? So there's a ratio is what I'm getting at here. So if I'm using a 6% take profit and a 1% stop loss, I don't need a good win rate, but 6% is still achievable a lot of times where I can get, roughly 1 out of 3 trades, roughly, right? And that's going to depend on your samples and all that good stuff. But I didn't need a complicated strategy. I didn't need anything other than just some good old fashioned discipline and a chart, right? So now if you want to really ramp up those results, then you can incorporate things like structural support and resistance and all that good stuff. But the core lesson here, sorry, I should probably make that bigger if it's on the screen. My bad. The core result here is that win rates is a BS metric. I don't believe in them. They're just a distraction. Analysis at the end of the day, it really doesn't matter. It makes you feel good about following a set of steps so that you can be confident, and it filters out trades that don't make sense. Because the price isn't going the direction it's going to make you money. And a lot of times that helps you identify risk, right? And that's really what analysis should be used for. It shouldn't be used for trying to predict, but it should be used for things like, here's a super tight risk range. I like this, right? This is my risk range. So every time I see a small red candle, if I want to, we're going to go a long position there. Now this isn't a tried and true like silver bullet strategy, obviously, but it's a good place to get practice. Okay. And that's what I want everybody to start with, is just get practice. Just learn how you respond to seeing certain things in the market, and you'll have a better time. You really have to figure out how you're going to react to stuff. More importantly, you're going to have to figure out what gets in the way when it's time to take that profit. And that's where a lot of traders just hurt themselves, because it's just never good enough, right? Because they see this and then they want all that. And then they're like, why the hell did I sell here at 12.37%, which is still really good. But that's only because they see, 243% profit, which you're always going to be chasing that mirage. So don't feel like you have to get the whole move. But more importantly, you have to study yourself more than a chart. And I know everybody hates to hear that, but realistically, that's the only thing that's going to make you successful. Right? Because I just demonstrated it. The analysis part, that should be super simple, super straightforward. We had 6 trades, 2 of which were wins. Most of them were losses. We still made a net profit of 8% in 6 trades, which is what, December to January. So a year, which isn't that great, but you already outperformed 4 savings accounts at a bank using 0 analysis, right? And obviously there's better ways that we can make that more efficient. But yeah. So that's my goal, is just to demonstrate that 90% of your focus should not be on charts. It should be on yourself. And you have to have that conversation with yourself. Is it cheesy to study yourself and to understand your psychology, or is it insanely lucrative once you figure it out? The chart was messy, so we had to adapt a little bit, but I let you pick all the stuff and I just showed you how to manage risk, and that's all we did. And there was a lot of profit on the table, so to speak. Right. And over time, you can scale out and learn how to let things run and all that good stuff for disproportionate profits. But for just blind block profit, lock stop loss, just get out of the trade. Like that's your number one priority. You know, I'll do that all the time. Just pick a level, pick a ratio, and just wait till the price is going over the level and make sure it keeps doing that. Death Gun, I don't really trust myself to do this, to be honest. I've been losing confidence faster than EYE and lost value. That's pretty fast, man. So, okay, so how are we going to build that trust? And where does that confidence need to stem from? If it's in the end result, you're going to have a hard time. Let me ask you a question. Do you think you could go out into the market right now and find me an example of just one small red candle, just like this, that has a candle, a bullish candle that breaks over its opening price? The dude says yes. How many of you guys think that would be easy to achieve? Or is it some insanely unrealistic, unachievable? You sure you could find it, but not efficiently? Okay, well, give me a chart. Just give me any chart, just a random ticker. Franklin says yes. How you doing, Franklin? I haven't seen you chatting here yet. You're new? Well, welcome. Welcome. How long have you been in the market? Don't be shy. Pretty new in the market. Well, that's good. You got fewer bad habits. Want to learn more? Okay, well, let's get you guys a very straightforward template right now. Somebody give me a random ticker. Anybody. And this is why I let you guys pick tickers and stuff, because I want you guys to see that it doesn't have to be super, you know, like it's no secret sauce that I'm holding. SYTA, give me a time frame. A clean time frame, ideally. I actually like this company. I don't own any shares, but I like them. 30 minutes. Okay. So my goal is to find one specific thing and one thing only on this chart. I'm going to, while that's happening, I'm going to put it over here. Right? What am I going to drill down on this chart and look for? If I'm Death Gun right now, looking at SYTA in the 30 minute, I'm going to look for a small red candle that has a bullish candle breaking over it. Right? So that's very, it's a very simple concept, but it's very difficult to do stuff like that if you're trying to fill in the gaps, right? So instead of trying to fill in the vague concept of what I'm asking, I want to walk through step by step. So what is a small red candle, right? It's relative, okay? So if I say, you know, you go find me a small red candle, you go find me a small red candle, you're going to come back with two different candles, okay? So instead of doing all that, what I can do is I can say, okay, well, let's find a candle that kind of looks smaller than everything around it, all right? And what I can do is I can just come up here and I can say, okay, well, you know, I'll turn extend hours off too, because it's a distraction, right? So if I'm looking at all these candles, just a sample range, right? If I'm looking at all these red candles and I say, okay, well, this one's big, like the big ones are more apparent, they jump out at us, right? And I can say, okay, well, this is small, this is small, this is small, this is kind of small, this is a little bit bigger, so it's medium, right? This is medium. So then I can take that a step further and I can make it very literal. Okay, I can say, okay, this is a big candle. This is a big candle. This one is smaller, so let me look at just the smaller ones. That's bigger, so I can erase that. So what's the range on this one? I can say, okay, that's, you know, about 20 cents. So if I can find a candle that fits in this box or that's smaller, so I can erase this one. So now, you know, these are about medium, right? So now let me find one that's even smaller. So I like this one. This is super tiny. That's pretty small. You know, this is small. That's small. So I don't need to look at this guy anymore. So I feel like my average size for candle is probably going to be about that I want to look for. So I kind of like this size. Okay. So what's the range on this one? About 5 cents. Maybe I'd make it a little bit bigger. Okay. So 6 cent candle or smaller, roughly, if I had to guess. Now I just got to drag this box around and see what fits inside of it, right? So if I look right here, now I can't actually move this box for some reason because my wheel is being stupid. Yeah, it's not letting me drag this stuff around. But I could just kind of eyeball these at this point, right? I could see this is a big candle, this is a big range, and I'm looking from the opening price to the low. I could say that this is kind of tough, but I also don't see anything breaking over these guys yet. And specifically what I mean is the top of the body, right? So I can't really use those, but what I can use is something like this. Okay, now this one had price break over the high, it had defined risk, and it would have happened to have been a stop loss because this establishes the risk range And then I have that disproportionate take profit somewhere up here, right? Don't really know where it is till I figure that out. So if I was using a small red candle, it would be this. Now, if I come over here, right, and I apply the same concept, I don't see any breaks over this. And here's the opening price for this one. Here's the opening price for that one, opening price for this one. This is still a small candle. And I got defined risk, and then I got a disproportionate take profit somewhere up here. So this would have been another loss, right? But I don't care about the end result here. I just care about developing my skill and being able to identify these setups. So in this case, I've got kind of a medium-sized candle here, but this risk range is too big, right? Because that's the same size as this, or just a little bit smaller. So it's pretty big. So we're going to pass on that one. Okay, so if I'm Death Gun, I'm just looking for low-risk setups. Okay, I'm not looking for the end result to be positive or any of that stuff. I'm just looking to hone in on these small red candles because that's my first step. Okay, does that make sense so far? And you feel like that's something you can do? And you're going to have profits sometimes, like this one. Beautiful entry. Is that something you feel like you can achieve? You guess? All right, well, every day, just look for 5. Just pick a random ticker. You can use ChatGPT. Just, hey, ChatGPT, give me 5 random tickers. It could be Apple. It could be the Mag 7. You can do Apple, IBM, Tesla, all the big NVIDIA. Just look at random timeframes and clean timeframes, and then look for those small, low risk opportunities. Okay. And then the more skill you get, more experience you get with that, like this range, too big, right? The better sense of judgment you're going to get out of what you can look for in the market. So that's an acceptable range, I would say. And that maybe that's a little too big on this one, right? Just erase those. And again, I don't care if the price goes up or if the price goes down. I just care about identifying a small risk opportunity and the price breaking out of that range. Okay. So do that 5 times. That's 25 a week. So 5 times a day. Obviously, SYTA is just selling off, right? It's not a very good one, but if we find something that's moving up, right? Guess what happens if we take that same exact concept to a chart that's uptrending, right? Trend is friend, right? So this one doesn't get broken over. This one does. This one does, but that risk range is a little big. It's all good. That's too big. That's moderate. I don't really like that too much. And then we kind of have a bigger one there, and then we kind of fall back down, right? So these are almost all winners. These are almost all losers, right? Does that make sense? But they all had the same exact setup in that the risk range was small, controlled, and defined. Okay? So if you're struggling and you're constantly buying into downtrends and hoping you get the reversal, that's probably why. You're just going against the trend and your risks are uncontrolled and undefined. So you don't buy anymore. That's good. Just focus on developing your skill set. I don't want you to trade anything until you're confident. I don't want anyone to trade anything until they're confident. Doesn't matter if you've been doing this for years. If you're not able to demonstrate a consistent, profitable P&L, you're putting your money at risk unnecessarily. You haven't developed anything since you took your capital out of Robinhood. So just treat this like a video game. You're just looking at shapes and colors at this point. You're just looking for tight ranges. Screw divergence for now, right? It works, but without the discipline and the psychology, none of this stuff's going to matter. So what you need to do is build your confidence up and your trust in yourself, because what's happening is you've got 9 little components inside your brain, and each one has a voice, but there's no hierarchy. So what's happening is you've got your impulsive protector, right? He's stepping up and saying, no, I don't want to deal with any of this. We're going to resolve it with violence, get it out of my face. Then you've got your comparison piece, your ACC, and just constantly throwing panic signals because nothing matches your expectations, and your expectations themselves are caused by other things. And it's all just a big mess in there. And that's okay, because outside the market, that conversation is happening in a productive way, because that's how you've been conditioned every one of us has, right, as a species. But in the market, which is designed to exploit that, we're confronted with all this uncertainty, and our brain hates that. So until you can develop a better structure for that conversation, and actually learn to exploit the market, you're gonna have a hard time. So don't worry about adding any other pieces of analysis in or anything complicated. You're just looking for something small and consistently achievable, like identifying small red candles that get price to break over them, right? You can get into the fair value gaps, Fibonacci's, divergence, all that good stuff if you want to, but it's a waste of time for now. You know, look at this kind of risk reward. And that one. Sometimes you're going to win, sometimes you're going to lose. When people look at analysis, they usually try to do so in an attempt to avoid losses, and you just can't do that. It doesn't work. Trust me. It's not about avoiding losses. It's about embracing them. All right, so like right here, this is perfect. Like this is textbook what I'm looking for. You see that? Just that one high quality setup with the defined end result. If it went down, that's okay too, right? Because our risk is super tiny. We had the next attempt here, but it didn't break over. So there would be no opportunity here. We got another beautiful risk, beautiful low risk opportunity here, and the price didn't break over it. Okay, but this is the area of potential value, and we got one good quality trade opportunity out of it. I wasn't looking because I was rambling, but that's the idea. Is we just pick a couple charts and we just do very simple things. And then that way you're not having to focus, what's the meaning of this candle, this candle, this candle? What does this candle mean? What does this candle mean? How do they, you know, what story are they telling all together? Blah, 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 right? Because at the end of the day, it all boils down to how well you can manage your risk, and that all boils down to how well you can manage yourself. So you guys are getting a lot of the lecture today, and I'm sorry about that, but I have a monster and I'm drinking it. So you get what you get. All right. So if we come back to PCSA, okay. If I just look for low risk opportunity, or ACXP, I guess is probably a better example here. You know, if I'm just looking for low risk opportunities, or just opportunities in general, right? If I'm just looking at this in terms of risk, 20 MA and Gulf on daily forever. All right, let's take a look. I'll slap the MA on there. 20 MA. I like it. That risk range is a little big though, right? Just looking at the size of these relative candles. I mean, I like it though. So this might be something we use the 1% rule for, right? So basically what BevNet is popping in the chat and saying is that this chart has thrown a 20 MA strategy entry signal on the daily time frame, and it's got a 3.02% risk, and we can use a 1-to-2 or a 1-to-3 risk reward ratio, or both, right? Because we can scale things up. Okay. There's the entry. There's the stop loss. And we get rid of that. Okay. There's that. There's your first target. There's your second target. There's your stop loss. And it's just based on some common sense stuff, right? We're just looking for a low risk opportunity when the price is going our way. We have a defined take profit that is achievable. We have another defined take profit that is achievable and has a disproportionate range compared to the risk. And then we have a hard cut point so that we're not holding down unnecessarily when the price is no longer going in the direction we want it to go. Does that make sense? And if you look at it, at the root of it, it's the same thing. It's just a color change, a low risk color change. Just like over here. This is a beautiful example right there. Sorry. All right, positive slope on the moving average, color change with a small range on the candles, and that's pretty much all you have to think about. Doesn't mean you're going to be profitable all the time, but when you're wrong, it's not going to destroy you. I really hate this chart, by the way. Sorry. You know, but again, you know, there's so many opportunities on things like this that we can just, like, if your eyeballs are adjusted and focused in on these low risk opportunities, plenty of opportunity. All right, that's got a negative slope, so we don't want to use that one. This has a positive slope. All right, So it's just waiting and looking for high quality setups that make sense. So I just pull up SPY again. Does all that make sense? So for you, Death Gun specifically, I just want you to look for those small red candles with color changes for a while. Just practice that till you get confident at it. Spend maybe a couple of weeks, just focus on that. That becomes your definition of success. And the sooner you can get into the market and get out and just pick your 5 and just be done, the better your confidence will be when it comes to looking at charts, because you'll be able to ignore 90% of the other garbage on the chart. Well, you're a scammer, so no. All right. Does that make sense to everybody else? I do have to jump off here pretty soon, but does that make sense? You just have to, just 5 red candles per day. I don't want anyone to trade anything until they're confident. But I can't legally tell you not to trade. But I can tell you that trading, and before you understand what you're doing, carries a much higher level of risk, which is why I don't want people to copy trade me, because I use a variety of strategies. But I just want you to focus on finding 5 examples of small red candles that have a color change. So if I erase all this stuff, okay, this guy right here, this little red candle has an entry, has a low, right? The opening price and the low, that establishes a range, and it's broken over, and this range is small and acceptable. So that right there would be an example of what I'm looking for. Just do 5 of those a day. Is that something you can achieve? If you want to, just for live practice, go ahead and find one now, and then just tell me what ticker and time frame, and I'll look at it and we'll confirm it. It'll be fun. Actually, all you guys can do this. I'll fire through them real fast, because my brain is just going to say it's pass or fail, right? I just realized I've sent you guys out to look at the charts. Oh, well. There's another beautiful example right here on CERO. Right? Not for a trade, but for demonstration. Right? Just a little 1 to 3. Easy peasy. So this one up here didn't get broken over, but that risk range is beautiful on that. I like that. That's good. There it is. Boom, done. There's your 1 for the day. Doesn't have to hit target. Doesn't have to do anything other than just be a small red candle and then a bullish color change. You try to keep on it. All right, beautiful. Once you can do that 5 times a day with confidence, then come back to me and we'll get you on the next step. Okay? I want you to do this in small, achievable bites that don't rely on an end result being one or the other, right? Because the end result doesn't matter at the end of the day. That'll all work itself out. Be waiting for a while. Well, I'll be here every day, so you ask questions. I just found one. Founted. Here's another one right there. Boom. All right, doesn't have to be super complicated. So this one would have been a stop loss, assuming. Yeah. I wouldn't mind being that dude. He gets down. Here's another example. Here's another example right here. This one's a loss, right? Assuming that it went down. Right? I don't care about the end result. I don't care what it does after that breaks over. I just care that you can identify a low risk opportunity. And sometimes they're going to go up. Sometimes they're going to go down. What we got to do is reprogram your brain a little bit, because it's conditioned to only look for stuff like this where it goes up. Okay. So you get your 5. Everyone else get your 5. Just practice it. Share it in the free lobby. I'll be there waiting for you. We'll just do some pass fail real fast. Let me just go down the cues, right? I'm just going to point out the small red candles. I will literally just start at the beginning of the day. Ooh, look at that. That's nice. It's going to start at the beginning of the day, and we'll just do some pass fail. This is a pass. This doesn't get broken over, so it's not a pass. That gets broken over. That gets broken over. That does not get broken over, so that's not legit. That gets broken over. That gets broken over. That gets broken over. So that's like a moderate size. That's beautiful, and it gets broken over. Beautiful. Beautiful. That's amazing. Beautiful. Beautiful. Beautiful, beautiful. Doesn't get broken over, doesn't get broken over. Too big of a risk range. And there we go. So we're done. Okay, so I don't care about the end result. I just care about whether or not the price gives me the low risk opportunity that I like to look for. So in this case, I just whipped through in about 15 seconds. I got 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay. Easy peasy. Dupgun, have a good one, Pookie. I'll talk to you whenever. All right. I'll be here, man. Just keep it on, and I'm glad you're here, man. We'll get that confidence built back up. All right. Does anybody else have any questions before I do have to jump off of here? Does anybody have any questions about this stuff? I don't want anyone to focus on like trying to master a specific strategy or anything. And I teach a lot more of this stuff in a lot more depth in Lifetime, but I understand that's also a much bigger, it's a much bigger price point, and it's a lot more information. So when you guys are ready, I'll be up there waiting for you. But don't feel like you have to try to jump into anything. We have coaching. Let me put the coaching links here in the Discord. You know, these guys are great, and they will definitely get you taken care of. We also have the free trial for premium, if anyone's interested in that. And I will be on the other side waiting for you guys with a lot more access. So hopefully this helped, and I got to end the recording now. Thank you guys for watching the recording.